Okay guys, we're going to follow up something I've been doing for the squad. Roll the intro and I'll set my charts up. A warm welcome to one and all. What we're looking at here is a quick scalp, but I need to know if I've got enough room to get up to here. Well, I do. So we're going to pop it into market now, just like so. Boom. And I'm going to edge it back ever so slightly. Right, we're in. Brilliant. And what I'm aiming at is this here, this line. And it's going to be about 10, 11 pips, maybe it's a bit more. But I'm going to scale it back across this leg here. Okay. Now, I know I'm in early, and I'm doing that on purpose. Let me show you why. I've just done this for the guys. Buy it. Low time frames is buy it. It's a risky scalp. So if it's low TP, I want to be below 14. That's kind of like your normal. I should really call that average target, really, shouldn't I, rather than min target. So I'll just change that. We'll call it average target, because that's the average target. And what I'm doing is essentially been working out what the bias is for them. There is a tool for it, which is here, and it does everything for you. The actual settings for that one were here. So, and the way it works is you go through multi-time frame analysis, and it breaks everything down for you. It's told me what to do, so I'm quite happy with that. Now, I've been doing this since early on this morning to get just a few pips. Now, it's all about timing. So if we come down into chart ideas, so 20 past 7 this morning, or 25 past 7, put the strengths in, and we can see pound JP, they're kind of sitting on top of each other, so it's only going to be a scalp. Now, from there, I broke the chart down fully, full markup of how this is working, right the way through it, right the way through into the various indicators and whatever we use and how it works. And that part was done in here because that's the markup. We then go into this one. Now this was at 9 o'clock. Where we start building that up, and then there you go, there's the indicators and explaining how the direction is going to work, etc. Wasn't ready at that time, so did it again, 10 o'clock. We're now in the 10 o'clock hour, and again, through it, worked out what we're going to be doing, what we're looking at, and also dropped in the sheet that you've just been seeing. So the guys know exactly what it is that I'm doing right now. Because they just follow the path. Now what I'm doing is I'll be looking to stage into this to get up to there, and if I get 10, 15 pips off the edge, I'm quite happy, because the way that works is that's the baseline. If it runs for me straight away, outstanding, but I always expect the market to go against me. Why? Because it often does. Market is a pain in the backside at times. So I'm then going to stage into this particular trade down to here. Oh, well done, girl. See, that just brought my coffee. Did I get a smile as well?
Yeah, I got your message.
That's good having Alexa, isn't it? The good thing with Alexa is I can tell her up here to tell her to put kettle on downstairs. Then she comes running up with a face like thunder, and then she sort of beats me up. So when you see me later with a black eye, that's exactly what's been going on. Right. So put our next buy order in underneath, and if this one triggers, outstanding. If it doesn't trigger, doesn't matter. So the next entry point will be here, pretty much along this cluster, and the next one will be down here at the baseline of these, working our way down to here, and we'll be able to work inside of this trading arena. That's the general gist. That's what we're doing, and as soon as we hit this red line, ka-chunk, I'm out. If I get 50 quid, amazing. If I get 500 quid, outstanding. But I'm going to tell you something about money while we're talking about that, and I have a coffee just while we're watching this a second, because we all know Scruffy likes a coffee. There's a video out later on about scaling up, etc. And the biggest mistake any trader makes is they put the cart in front of the horse. In other words, they put the money in first. Your money will look after itself. Size appropriate to your account. If you're over leveraging it, in other words, you've got 500 quid and you're trying to put £5 a point on, you're a fucking moron. Because you're never going to make any money. You'll have a couple of one-hit wonders and then it'll explode. You want to be trading. If you've got 500 quid, 50 pence at most, 50p. But all these 50p's add up. And then you get £1,000. Then you can be trading with £1. Then you get £1,500, you trade £1.50. And that will naturally look after itself. But most people put the money first. And that's the biggest failure. And it's why when anybody ever comes to me and they're only ever talking about money, I won't help them. And I won't really engage with them. Because there's no point. I already know you failed. And I'll tell you the first time, I'll tell you the second time, I'll tell you the third time. Calm it down. And if you don't, well then I can't help you. Because you're basically a gambler. And a gambler will never succeed. You know, and it's as simple as that. And I know people argue with me all the time. And they go, oh, well, you've got to do this. You've got to do your 3-to-1 risk reward. You've got to do all the other. All right, I'll take that on board. I really will. As long as you're making a wage from it. But if you're not, then what you're talking about is absolute crap. Why? Because if it was working, we wouldn't be arguing. There's a good reason 80-90% of people fail in this industry. It's because they're not cut out for it. And there's plenty that are in it that are definitely not cut out for it. But they'll tell you all this garbage. You got to go 3-to-1. Oh, you've got to look at this system. Oh, look, it's below equilibrium. So therefore I buy it. It's above equilibrium. Therefore I've got to sell it. They don't even know what fucking equilibrium means. It does not mean anything. It means two opposing forces coming together at a central point that they can't move any further. It's not a buy or sell signal. When you're looking at it, it's a midpoint. That's all it is. Equilibrium is balance by two opposing forces. It's not a center ground. So you've got to be careful with all the jargon. Liquidity sweeps, all of this. It's high and lows. You know, market structure, just support and resistance. So calm yourself down a little bit. Keep it as simple as possible. Get in, get out, get paid. And if you're happy with what you're being paid, brilliant. Do it again a bit later. There we go. It's now at 34 quid, 35 quid off the first position. That gets to 50 quid and cashes out. I'll be more than happy for this hour. And then I'll look at it again the next hour and I'll do something for the process inside that hour. There we are. Trade's done. Complete. So what's happened? Oh, it's gone to the bounce point, which is pre-marked, and it has stopped. Why? Because of key areas of attraction. Now, if that bursts through, I'll then be looking to work inside of this trading arena. But there we go. Just do all my tickets are out, and then there you go, 54 quid in 6 minutes. So that's trading, guys. You get in, you get out, you get paid, reset, do it again. This job is not difficult. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.